Just before I hand back to Geeta, I would just like to thank her very much for all the work that she's put in to organizing today's event. It's really been a great pleasure, and I'm very grateful to her.
Thank you. So before I introduce the panel to you, I have a question for you. Who in this room has made money on the stock exchange? Put your hands up. Have you invested and made some money? That's it? Okay. So some people have made money. For the students, and I'll come back to you, those people who've made money. To the students, I asked the question, if you were given the choice of buying a bearer share, that means you're absolutely entitled to lose money, you're absolutely entitled to make money, but that's about it. So you can have the upside, downside without any obligations. Would you buy a bearer share? It's different from a preference share as we know it in India, right? So put those thoughts aside. You can have the upside, you can have the downside. The Bombay Stock Exchange can help you in nanoseconds, 2 lakh nanoseconds. So would you buy such a share? Would you put your hands up or just sit on them? Colin,
yes.
You've got your answer here as to what might happen in India. Now let me present the panelists, starting from my extreme right, Mr. Prashant Jain. I'm sure you know of him, the current rock star, and who is a long-term investor of the kind which Colin speaks about. And much admires. Thank you very much for joining us today. Our very, very kind host, Ashish, and I think everybody in the room will know him. So Ashish, with your permission, I won't describe you further. Colin, you've already been introduced to. Sandeep Parekh, he's the founder of a legal firm, and before that he was executive director at SEBI on the legal side. So you have a really distinguished panel. You have a very experienced regulator. You have a very experienced investor. You have a forensic academic. And you have a legal brain over here who tears everybody to shreds. So we will have some question time later. But first, I'm going to pose a question. I'm going to take the moderator's privilege to ask a question of Ashish. Ashish, would we ever, in our most extravagant of dreams, would we ever consider having a stock exchange with a socialist mission?
In a sense, stock exchange is a socialist mission. Basically, the way we look at ourselves is, how do we help the society? As I think Colin rightly put it, the organizations which don't look at all the stakeholders, they are bound to become irrelevant. And if the stock exchange has to remain relevant, which it did for 140 years, and it has hopes to remain relevant for next 1,000 years, it has to work on the society's issues. And if you look at my last 2-3 years discussions, it's about saying, how does an exchange help India resolve some of the most burning issues it has of job creation, of wealth creation, of staying together? And if the exchange doesn't work in that direction and works only for itself, that is, for example, I call trading for the sake of trading. That is, we have, as you said, churning and churning and churning, but nobody gets anything. There are no new companies coming up. There are no jobs coming up. There is no new wealth getting created. Then that framework is bound to become irrelevant, and society will pass us by. So in some sense, we are sitting at the center of the society. And if we don't do it, then who else will? And if we don't worry about it, and if we don't work on it, then either society remains where it is, or society moves and we remain where we are. So somewhere on the line, for me, I am very clear that BSc has acted as a catalyst for job creation. India needs to create 1.5 crore, 15 million new jobs for next 20 years every year, 300 million new jobs. That will not come out if BSc is not taking its onus, its responsibility seriously. BSc has to do that, and then if it ends up making profit for itself, it's fine. But it needs to promote good corporate governance. It needs to promote good corporates to come in, entrepreneurs to come in, raise funds, make huge wealth for themselves, but also for other shareholders. And then the country benefits, and then there is a virtuous cycle getting on. So for me, I mean, if there was a social organization, then BSc it is.
Thank you. Thank you. Prashant, is there anything, any particular point you'd like to pick up from Colin's talk?
Sure. I think Woody Allen is about to be proved right yet again. So I wish there was vacuum here so sound could not travel, because he said that, I mean, I might be, because I understand this is the first time I've come across these thoughts, even though I've been investing for 25 years. I think Professor said that sustainable profits are the, yeah. I think I would like to pick on few points what Professor highlighted. He said that profits can't be the only goal of an enterprise. I 100% agree with that. He said sustainable profits are the key. And I think I again agree with that entirely. I think stock markets are a beautiful mechanism to reward sustainable profits of companies. If you look at the way companies are valued in India, and I'm sure all over the world, the range of PE multiples would go from low single digits to very, very high double digits. So we have companies here which would trade at 5 PEs, and we have companies which would trade at 70, 80, 100 PE multiples. And I think the companies which are trading at very high PE multiples, which have created so much wealth for all shareholders, are the ones which have been extremely responsible to their customers. You must be relevant to the customers, you must add value, you must be differentiated for your customers, which have added value, which have managed to hire and retain talented employees. And I think which have also paid their taxes to the government and conducted the business in a law-abiding and a transparent way. So I think there is a very good fit between running an enterprise in a socially, legally responsible way and creating wealth. However, I also want to submit that profits are essential to the success of an enterprise, because if there are no profits, then you are not able to invest, you are not able to create jobs. And I have not come across any companies which were not profitable or not reasonably profitable at least, and yet successful and good for the society. So I think there is stock markets kind of agree and echo what you are saying. And I think it's a beautiful mechanism that the more sustainable, the better quality of a business it is, for the same profits you create more wealth. I think I would like to pick on one or two more points here. And he said, I think that was an excellent idea, that one should tax companies that use or abuse human, social and natural capital and reward or subsidize others. I think this is something which is a very interesting idea, and but I think probably the government, the regulators will have to do their bit on this and come up with laws which measure the actual cost of doing business in these areas and act accordingly. One more point which I wanted to share here is that the Indian standards may need to be a little different from what is probably right for the West, because our biggest challenge, as Ashish ji said, was unemployment and poverty. So I think while we have to be very mindful of the costs on environment side, the human side, but I think we cannot ignore or underemphasize this very big challenge that we have, that India is still a very poor country. So maybe, I mean, we have seen what very labor-friendly laws in the West, they have done a lot of damage, not just in the long run to the companies, but to the societies and the employees themselves. So I think we need to be a little mindful of that. And one final point is, in my experience, I have found that family-owned businesses, or I would, let me qualify, there are many enlightened family-owned businesses in India which have actually been probably the best enterprises that we have come across. So I would say over time there is a realization in India, and stock markets have been have played a key role in that, that it is not just profits which you make today, but how markets are willing to value those profits for you, and that is where the real wealth comes from the market capitalization. I think which has encouraged lots of families to conduct their businesses in a far more open, transparent and sustainable manner.
Thank you.
Yes.
Can we have a round of applause for that? Come on, guys, you can do better than that. Let's have a proper round. That's better. Sandeep, you've heard a lot over there. And most of the tax part, the legal part, would not allow Colin's ideas to come together. Yesterday, I was listening to UK Sinha, and he said that from 64th rank in the world of stock exchanges protecting shareholders, India has now risen to the 7th. Now, in just a few years, that is one hell of a lot of jump. And congratulations, Ashish, for leading that. So what he said earlier on the social part. Now, of course, we have a little problem with that. Because if we listen to Colin, well, that's not so important. The bigger role of society is more important. So I do want you to ponder on that, because we'll come back to that. But for the moment, Sandeep, any comments on Colin's talk?
Thank you. Yep. Thank you very much. Just kind of a little comment, and then I have a question for Professor Meyer. So I think the broader comment, I think 20 years back, it was a time when if you said that stakeholder value is important and shareholder value is less important, people would have actually laughed at you. So I think we've come a long way from those times. I think today there's much more kind of, a lot more emphasis on stakeholders, including employees, the environment, everything. And I think that's well recognized. We've also had the financial crisis in which people kind of, gave off their debts to the government, and they kind of privatized profits. So we've gone through a 7-year pain across economies because of that behavior. So I think that has also been a learning curve. Clearly, there are kind of, I see things in 3 concentric circles. One is, the smallest circle is the law, which says you can't do X. For instance, you can't pay less than minimum wage. Clearly, I think those standards are set, and people who kind of breach that face the consequences. Then you have the larger concentric circle of governance, which is, and when I say corporate governance, I mean not just legally prescribed corporate governance norms, but something slightly higher, something higher in terms of what ought to be. And clearly, people who have, including family firms where people have set higher standards of corporate governance, the statistics are very clear. They have provided much higher shareholder value. And obviously also higher stakeholder value. So everybody has kind of won. It's not a zero-sum game. And the largest kind of concentric circle I see is really, the world of kind of what is right and what is ethical. And I think that's something which is, you're not obliged to do something, but you end up doing it anyway because you think, the corporate culture kind of pushes towards. And I'll give you the A very interesting example, I went to a Taj hotel 2 months back, and an employee there told me that, it was actually a fairly small property, and he said, if any person in the hotel or the immediate family falls sick, this is a huge delegation of the staff which goes to his house. They take over his kitchen, they take care of the employee. And he said that people are offered 2x the salaries that they don't want to leave the job. So I think that's the kind of qualitative difference which a company which is not just fulfilling the law, the corporate governance standards, but also kind of a higher calling. But at the same time, I have another kind of a little contrarian question. Being a lawyer, we like to kind of state the obvious in terms of the incomprehensible. But I think there are contra examples also, and I'd like to kind of give an example of Pepsi, which is trying to move away from sugary drinks into health food, and it's not doing as well as competitors who are not going in that direction. So just any kind of comment for companies like that.
So again, hello. Yeah. So I'm going to again exert moderator's privilege, just for a couple of minutes, please. Ashish has to leave, but I do want to ask a question before he does. Was Raghuram Rajan right recently to point to the exploitation of creditors by promoters in firms, and if so, what needs to be done about it?
Hello. It's a tricky question, and my question, basically, if you ask me whether it is right or not, the person who is speaking is at the right place to figure out whether it is right or not. And when he's speaking with an authority and the data and so on and so forth. But when he speaks that, there is a huge issue saying that if you're not doing your job, then only this is possible. So you need to do your job, whoever is speaking, right? Because he has the authority to also ensure that the creditors don't exploit, right? So for me, it's a kind of a chicken and egg, that the person is, or the organization is feigning ignorance or helplessness, where they have all the powers to do which is required to be done, right? So somewhere I don't buy too much of it, but if it is so, become tighter, boss. That's the job, right?
I think this was a tough question, and you took it, so thank you very much for that. If you'll please excuse Ashish Kumarji, and once again, thank you very much for hosting. Prashant, is it okay if Colin takes Sandeep's response to Sandeep first, and after that come back to you?
Okay, thank you very much. And Geeta, despite your attempts to encourage the panel to be as hostile as possible, they were very kind, in fact, in their remarks. Let me just say a few words about them. First of all, on Ashish's point about stock exchanges and their roles in society, that's an extremely important one, because we have to bear in mind that it was only a few years ago that stock exchanges around the world took the form of mutual organizations. They were mutually owned by their members. Now, while that's retained in some stock exchanges, many stock exchanges have demutualized and taken on the form of essentially share-owned corporations. Now, what that in essence means is that it was once the case that stock exchanges were viewed as essentially like utilities. They had a social function, that they were a central part of the financial system. They were the hub around which activity took place, and that activity obviously used to take place in here. Now, the fact that it no longer takes place in here, but is done so electronically, in no way undermines the fact that stock exchanges still are essentially performing a public function. And if we are to move increasingly in the direction of having stock exchanges that have a profit objective, then we have to ensure that it does not contravene some of the characteristics that I was talking about, namely that they have to be corporations with a public purpose and a clearly defined need to uphold that public purpose. If I could just turn to Prashant's observations on sustainable profits and just reinforce the point that he is making, that there is a lot of evidence now that companies that pursue sustainability do outperform in the long term. And in particular, if you look at the evidence on over 10 or 15 years of share price data, companies that are high sustainability firms measured in a number of ways in terms of their emphasis on long-term ownership, on long-term rewards and remuneration for their management, the measurement of performance not just in relation to short-term profits, but long-term indicators and broader measures such as returns on social capital and human capital, then those companies outperform other firms over the long term. And that objective can be obtained through a variety of means of ownership. So while I was emphasizing ownership that is essentially long-term in nature, that can well come, as you were suggesting, from essentially enlightened families. It does not have to take the form of trust organizations. In many cases, some of the most successful companies in that regard are essentially run by enlightened families. On the importance of the role of companies and the importance of stakeholders and the points that Sandeep was making, I think that he's bringing out a very significant element that is emerging and only just being discussed in this context. And that is essentially as firms as forms of security and protection. That the word company comes from the Latin cum panis, to share bread. And that is basically to act in a cooperative manner with each other and to support each other. And the story that you were telling about the hotel and what happens when employees fall ill is precisely the role that companies increasingly are going to need to perform in society, not just in relation to their own employees, but also in relation to communities more generally. And finally, in relation to, Geeta, your point about rising from 64th to 7th in terms of shareholder protection, that is a substantial achievement. And it should not be in any way diminished as a very important development. But I'd also point out that it comes up against the issue that I mentioned at the beginning, that what can be counted does not necessarily count, and what cannot be counted easily may count a great deal. And I just reiterate that in relation to the observation that in that ranking, I think it was the case that the UK ranked 3rd. Now, the UK is a country in which the number of listed companies on its stock market has halved over the last 20 years, from 2,000 on the main market to under 1,000 today, and where we have suffered basically the collapse of our manufacturing sector, from being one of the dominant manufacturing sectors in a number of areas, such as engineering and chemicals, to essentially having 2 large major manufacturing companies left in Britain. And I think that's illustrative of the fact that it may well be the case that these indicators of governance and shareholder protection only tell you a limited amount and not necessarily tell you all that is relevant to economic, let alone social performance.
Sandeep, you're okay? Can I go to the floor now? Do you, Prashant or Sandeep, do you want to respond to what Colin is saying? Or can I open it up to the floor? Yeah, if I may. So I ask my first question again. After hearing quite separate views, would you buy a bearer share? Still no. Excellent. Any questions for any of our panelists? This is your one and only chance.
I don't know if people understand what is a bearer share. Maybe we use different terminology.
So, a bearer share, as I said earlier, it may not have dividends. It may not have a particular tenure. You can buy and sell anytime. Clearly, I need to be educated. To the professor, please.
No. So a bearer share is, as its name suggests, it's a share that is not registered and which can be basically bought and sold when you like. It pays a dividend and it's got a share price return. It's just that I'm distinguishing it from registered shares where shareholders commit to hold their shares for a particular periods of time. And so really what it does is it gives people lots of liquidity. And they will have less voting rights, but so the long-term shareholders are giving up liquidity in return for having more control and voting rights over the company. So bearer shares are basically shares that many shareholders may anyway be trading, and they are just the regular form of shares that one's talking about in the market.
Thank you, Colin. So I'll ask the question again now. Yeah, I'll come back. I've got... anybody here would buy such a share? No. Okay. Do we have mics over there? There were supposed to be 2 people with mics floating around. Yatin? Yeah. So, Nipun, after Kaushik, I'll come to you.
In India, what will happen is these bearer shares will trade most aggressively because all the cash will be used to trade these shares, Exactly. Because when you have bearer shares, you don't have, the owner is not known. So you may have a situation that actually they will pick up, and the ownership would not be, it can pass on because we have a percentage of the unaccounted economy, so that actually it would kind of pick up and trade a lot, that's how it would be.
With the point being, it doesn't matter. All the money gets used up in its proper place.
Yeah, that's right. That's what I was giving you an answer.
Yeah.
So what would happen is, like we had the bearer bonds, Kisan Vikas Patra, and that became very popular. So all the cash gets circulated that way, And that's the reason you don't have bearer bonds.
Yatin, could you organize? There's a question in front here.
I had a question for the professor. You mentioned about that survey where Japan was tops as far as stakeholder value is concerned. Was it a broad-based survey? Where would India stand in that survey? And which would have been the other 5 top countries besides Japan, which would look at the stakeholder value as very important? I mean, is it essentially management ethics, social ethic, which are the countries where it would be so important? If it was a broad-based survey, would it have covered a larger subset of countries?
No, unfortunately not. It was only a survey done of those 5 countries, so I can't say where India stands on it. It was broad-based in terms of asking a lot of management within those 5 countries, but it did not extend. Now, what it's really picking up is essentially the very different attitude that exists towards what a corporation is in different countries. And the extreme at one end is Japan, where the notion of Japan as providing, for example, lifetime employment is firmly embedded and still embedded today, notwithstanding the problems that the Japanese economy has gone through recently. And that, I think, is a very distinctive feature of that economy in terms of the fact that it is retaining an importance of stakeholders in corporate life. I described Germany as having a governance structure that also puts a lot of emphasis on the rights of employees in companies. And really what these surveys are bringing out is that the nature of the corporation, as it's perceived by those who work in corporations in different countries around the world, is very different. Now, where would I put India on that spectrum? I was suggesting that, in essence, India comes closer to some of the continental European countries, so far as a lot of continental European countries have dominant family ownership as their structure, where there isn't widely held shares. So probably in terms of the survey, it would come closer to France and Germany than either the UK and the US or Japan.
Radhika?
Hi, I'm Radhika Rajan with DSP Investments. My question is to Professor Mayer and also to Prashant. If you have multiple objectives, such as social, etc., does it not confuse management decision making in a company, versus just having a simple profit maximization objective? And the second thing is kind of related to what Sandeep mentioned and someone else also mentioned about as a fund manager, are you really going to buy a stock because, because you think that they're also doing things socially appropriate? Especially in an economy like India, which is where rentiers type of industrialists make more money. I do have a third question as well. This might be more general, which is, I think all of you spoke favorably of family-owned businesses, but apart from Scandinavia, which is perhaps unique, where do you have instances of a family or a conglomerate which claims to be preeminent in so many different industries, like claim core competency in petrochemicals, retail, jewelry, et cetera, et cetera, et cetera? Clearly this points to a rentier type of economy.
Okay, so if I could take those questions together. It's very much a here and now type economy, insofar as I was mentioning earlier on, there are a lot of companies around the world that essentially do what I'm talking about, that have the sort of structure, that are highly responsible companies in terms of the way in which they conduct their business, and that emphasis on moving beyond just measures of profits as performance is a key element in their success. Now, to come to your first question of, is it not confusing to have multiple objectives? That is frequently put up as an issue in this regard, and I think it is absolutely diametrically opposed to the way in which successful companies operate. That is to say, where the confusion comes from is where companies feel under excessive pressure to pursue an objective that is not in the interest of the company. Okay, what should the company be doing? It should be producing products that people want to have. It should be emphasizing the quality of its products. It should be emphasizing the service reliability. It should be emphasizing the fact that it provides a good environment for its employees. It should be doing things that contribute to the delivery of good goods and services. And then the profits follow from it. If you say that the objective is that the company is there to maximize profits, it loses sight of what it should be doing. And that is something that, as I work with companies and I advise a number of boards of companies, I see increasingly as a problem, that if you put too much pressure on profits, they lose sight of what their objective is. It's not saying that there are too many other objectives in a world in which you allow companies to essentially emphasize other factors. It's quite the contrary. And in terms of the influence of customers, and can we expect customers really to play a lead in this regard? Well, this is, I think, an area in which we really do need to have a much stronger emphasis on the responsibility of customer groups. So let me give you an illustration. In the developed world, we benefit immensely from production of goods in countries in which the standard of labor protection is often lamentably low. And where over the last few years there have been some really serious disasters in relation to the treatment of employees. Now, in most countries around the world, we've introduced laws such as Factory Acts that says that you cannot have domestic production that treats employees in those sorts of ways. And yet we regard it as completely acceptable that companies should source from other parts of the world from producers that are treating employees in exactly the same way as we regarded 100 years ago or more as being completely unacceptable for people working in factories in the recipient countries. Now that, to my mind, is just an unacceptable position, and that one should have a fair balance in terms of the expectations of what customers should be looking for in terms of the way in which companies not only treat their own workforce, but also the suppliers in their supply chain.
Let's give the mic to Sandeep.
Yep.
Now that's like a huge canvas. Colin's reply, I don't know, Radhika, whether you're satisfied with the reply, but it's certainly controversial.
Do you want to come back?
Do you want to come back to that? Yeah, I'm going to give Prashant the last word. And it says, Sandeep, any part of that answer, I give you the full freedom to respond to any part of that.
So I think overall, of course, I agree with Professor Mayer's analysis. But at the same time, it's also a reality that the labor law standards in Bangladesh are going to be, hugely different from the labor standards of US or any of the Western countries, and that is not actually going to really stop the flow of manufacturing into Bangladesh or any of the other countries. So there will be, of course, some level of improvement based on, say, social media, etc. But I don't see how US law is really going to say that unless you give US minimum wage or half of US minimum wage, we are not going to allow you to source. So I don't see the law kind of moving fast enough. It kind of may move on the morality plane. It may move forward in terms of boycotting goods from countries which do not have even the most basic of standards. But it will be, I'm sure, it will be a fairly slow process in terms of moving forward, leave alone kind of moving to the Western standards of.
If I could just very quickly respond to that, because I know Gita doesn't want me to respond at all. But very quickly, let me just illustrate what some of the, quote, more enlightened companies are doing in this regard, where they're thinking about essentially adopting schemes by which they are looking to set the cost, the true cost of their employment in relation to living wages of employees in countries from which they supply. And that, to my mind, should be a minimum objective that is set for companies in this regard.
I think, Radhika, I feel that we should not, there will always be exceptions to most things in life. But in a general sense, I have seen a very good correlation between success and sustainability, doing the right things and long-term success. And I think we as portfolio managers, pardon?
Goldman Sachs is one of those examples.
No, there are always exceptions, but I mean, I as a portfolio manager can speak about my approach, and the approach of others can vary. I mean, I think we have taken a more balanced, a more pragmatic approach to investing, and we all are in a competitive world, and I think so but we have, I think, refrained by and large, or I would say to a very large extent, from investing in businesses which were below a certain threshold of either quality or of corporate practices. And when we invest in businesses which do not practice high levels of corporate governance, or which do not behave in a socially responsible way, I think we would not invest in such businesses for very long periods of time, because we appreciate that we are investing in a business which is of mediocre quality. So we would avoid poor quality and invest in medium quality businesses, but choose to be there for short periods opportunistically. But our maximum gains, and as we have gained more experience, I think our belief is clearly that the best performance, the best reward, the best wealth is created by great businesses. And great businesses invariably have struck a good balance between customers, employees, and shareholders.
Students, last question goes to you. Is anybody have the courage, maybe? Poultry. So obviously, the fund managers, there's a brave soul over there. Can we have a mic over here, please? Now, you know, let me tell my story first while we're sorting out the mic. In British big food stores, they have this. They have a statement in the alcohol section. If you're young enough to look like 21, that's really very good, which means that you can't buy alcohol unless you're over 21. So, in the same spirit, sir, can I ask you, are you a student?
Yeah, I have a question.
Great. You have the floor.
Hello. Yeah. Professor, I have a question. This is regarding the 10-point agenda that you have mentioned in one of your slides. One of the points you mentioned was like in having an independent board to stop the value erosion, I guess. So how do you want to conceptualize this idea of an independent board to stop this value erosion in an organization or a company? In your 10-point agenda, in your 10-point agenda on the company should have, one of the point was to have an independent board to protect the values of an organization. And how do you want to conceptualize this idea of an independent board? That's my question.
Okay. The answer is that if you, for example, look at the case of the trusts, the foundation companies that I was talking about, all of the members of the board of those foundations are independent trustees. And so none of them are executives of companies. Now, you don't have to go that far. In general, you can well have boards with mixture of executives and independent members. And one of the things that the Companies Act of 2013 has done in India is to strengthen the obligation on having independent board members on Indian companies. So the presence of an independent group of directors on companies is important in terms of allowing the company to essentially entrench the values of the organization and ensure that they are really become part of the organization's ethos and DNA, that they are adopted throughout the company. independent board members can play a very important role in ensuring that that is indeed what the executive have done.
I'm going to answer this question too. We're sitting in a truly historic room. This is a place, I mean, Bombay Stock Exchange was the earliest stock exchange. It was one of the earliest in the world. Companies Act 2013 mandates that a listed company should have a token female. So sometimes I'm that token female on some boards. And to answer your question, I think if this independent board of independent directors, at least some should be women, and you will absolutely have a well-run value system. So, yeah, women, at least give me a, even if the men don't. With that slightly lighter note, may I thank Prashant. First of all, it was wonderful meeting you again after nearly 4 years. And to be sharing a platform with you was an awesome opportunity for me. And also, I learned a lot today. Sandeep, you gave me my best lesson. First thing is within the first 5 minutes of our meeting. And I really value, again, we're meeting after a very, very long time. And of course, Colin, but less said is more. And to all of you who took the time to come here, I would like to individually thank all of you. And to the wonderfully smart people who asked lots of difficult questions, more difficult than I could think of. Thank you very much. And we close the session here. Thank you. More. Yeah. Thank you.
There.